So again, good morning, good afternoon, good evening, everyone. Welcome to the closing session of the International Conference on Inclusive Insurance 2020 Digital Edition. My name is Dirk Reinhardt, and I'm the Vice Chairman of the Munich Re Foundation, and I had the pleasure to chair the steering committee of this conference. Now, all protocols observed, I will keep the introduction to the speakers to a minimum, since we would like to save some time for discussions. But let me please welcome Mr. Vijaya B. Shah, CEO of Nepal Insurance, and also the President of the Association of Insurers and Reinsurers in Developing Countries. Welcome, Mr. Shah. I would also like to welcome Monsieur Denis Duverne, Chairman of the Board of Directors from AXA France and Chair of the Insurance Development Forum. Welcome, Monsieur Duverne. Also, warm welcome to Jan Kellett, Special Advisor of the United Nations Development Program in Switzerland. He is a Special Advisor in Finance. Welcome, Jan, and a warm welcome to Dubel Chamberlain, Managing Director of Central and South Africa and also Chairman of the Microinsurance Network. Welcome, Dubel. And last but not least, warm welcome to Catherine Pulvermacher, Executive Director of the Microinsurance Network in Luxembourg, and also the co-chair of this conference. So, ladies and gentlemen, dear speakers, dear panelists, thank you for taking the time for this very interesting session. And before we start, a little bit of housekeeping. This session is scheduled to last about 90 minutes. To ensure the highest quality of experience, participants will be muted. The session will be translated, so you can click on the translation icon and choose the language. And also, because it's being translated and because Spanish and French has more words than English, we ask the speakers, and I have to slow down myself a bit as well, not to speak too fast so that the interpreters can follow. Now, a question can be submitted via the Q&A function down there in the middle. This session will be recorded and will be made available online. If you click on the agenda website of the conference, you will find the recordings and the presentations once they become available. And if there is a technical problem, please message the MIN executive team in the chat function if you have any technical issues. So while there are still people logging on and maybe need a few more time, I would like just to try to recapture the past conference. So during the past 4 days, we were discussing a number of issues, and this certainly cannot capture the entire conference, but I would like to cover a few things that I found interesting. Now, certainly, and that's very clear, COVID-19 had a huge impact, and it certainly had a sharp impact on the income of those who are most vulnerable, which is the clientele for inclusive insurance. The situation has created some urgency that we need to digitalize, and that also will stay most likely after the pandemic, and that will also hopefully, and that did already trigger some actions among the regulators to allow digitalization. COVID-19 has also created a greater role for PPPs. We need to think big, start small, and scale fast. Long-term planning is key, and we need to invest in risk awareness. Risk awareness is part of risk management. Without risk awareness, insurance will be difficult to scale for the inclusive insurance clients. Certification could be a way to increase trust in insurance. On day 2 and 3, we talked about other topics. Again, what I just said, we need integrated risk management solution. Understanding risk is key. Digital methods help to scale. We need to actively involve the regulators in that process. Market research is important. If we start national strategies, we need to start with market research. We need to involve all partners, the industry, the regulators, and other stakeholders. We see new products. Demand in remittances-linked products is growing. We have seen a lot around hospital cash plans. We should use the value chains. We talked about low touch versus high touch. Low touch can reduce costs, but certainly insurance needs to be explained. So it cannot be high touch cannot really be replaced by low touch overall. Value builds trust. That again and again comes up. We need to create value for the customers. And one quote that I wanted to share from Matthew Branford was, climate change has no season. Certainly, COVID-19 currently is a huge challenge, but we should not forget about COVID-19. And just a few lessons from today, which I just summarized. We spoke a lot about digitalization, but everything that's online needs also an offline mode. It cannot be entirely digital, because sometimes it still doesn't work. Technology can be an enabler, but it cannot be replaced. It cannot replace face-to-face fully. And what we find exciting today doesn't mean we find exciting tomorrow. So the development, the changes are very rapid, and we need to keep that in mind. In many of the sessions, we have had a poll, who are we? And I just wanted to share some numbers on the conference. We had over 2,000 people that were signed up for the conference. We don't know if they all participated, at least they signed up. We had 127 countries represented, which was unprecedented. And what I found really interesting, of the over 2,000 people, far over 50% came from the insurance industry. So there seems to be a very big interest in the insurance industry. Now, come back to our speakers, and we gave the speakers a few guiding questions, and that was around what do they believe would be the main challenges post-COVID-19 and beyond 2021. How can issues like climate change, pandemic, inequality, and the insurance for economic development can be addressed and can be underlined, and what are the plans and projects of the organizations that you represent over the next years? So having said this, I don't want to spend more time on the introduction, and I would like to invite Mr. Shah to give his first views on the questions that I just raised. And I stop sharing my screen.
Right. Select. Yeah. Hello. Good morning, good afternoon, good evening to everybody. I'll just start my presentation by a brief introduction of AIRDC. AIRDC is a transcontinental association of insurance and reinsurance companies, and is primarily engaged in knowledge exchange and for promoting, including insurance in particular. It's headquartered in the Philippines, has 31 member countries, and then it's governed by a board of trustees elected every 2 years. Along with brief introduction of AIRDC, I thought of giving a presentation of Philippines, but then day before yesterday, there was a detailed presentation by Mr. Dante. So I will not repeat that, but nevertheless, Philippines has something exciting and which could be of use for all the participants as such. So I would like to share their story and a request for the slide, please. Members of AIRDC are primarily from 132 members. It's largely from Asia and Africa, but then it also, there are a couple of members from Latin America and two. All right, next slide, please. Next slide. Yeah. See, Philippines is continuously showing a invariable growth in terms of migrations premium generated. If you look at absolute figure as such, it was up by 12% in 2019. It covers 45 million individuals across the country, and which is not a small number by any standard as such. And major champion for these are mutual benefit associations, which account for 57.5% of the sector's premium. Um, and then there are small, you can say that players, but major players are mutual benefit associations. Next slide, please. So rather than going into detail of the premium and the segment as such, I'd like to share what lessons we can learn from Philippines. For success of inclusive insurance, it is very important that there is a proportionate policy and regulatory environment is there. Okay, the regulators and we can say that the policies should go hand in hand. Otherwise, what will happen is that whatever novel objective is taken for promoting this particular insurance assets may not meet the end result. It is also very important that government champions are necessary to lead and advocate reforms as such, because it should not be something for the sake of saying, because large number of people are involved, and we are talking of uplifting those who are at the bottom of the pyramid. So it is very necessary that government champions are there and then they actively lead and advocate reform as such. It is also important to have a strong microfinance sector, because normally microfinance sector lends money without collateral, and if there is insurance portion as such, it increases people for taking a risk and gives some sort of, you can say that confidence to the microfinance sector to lend it. The multi-stakeholders approach in market development provides rich opportunity for capacity building, technical working groups, and then public and private sector dialogue play a very important role in the reform process, so that we can correct it during the course, and we don't have to wait for the whole thing to pass on SS. And active role of government in project implementation also helps donor coordination, because a lot of these projects are, we can say that funded by UN and GICII and UK fund. So it is very important that if there is active role of government, then there will be confidence of everybody, all the stakeholders, and then it will get desired result. So these are the major lessons learned from Philippines. Next slide, please. There are a few challenges also, but what I see is that there are a lot of commonality between Philippines and Nepal. So I have a little detailed presentation about Nepal. Philippines and Nepal both have huge climate change risk. Philippines is also exposed to extreme weather condition and irregular weather pattern, which largely affects to the poor only. And then there are some of the products which need to be, you can say that, pushed into that market too. That's also a challenge as such. And then one of the challenges faced by micro insurance product is that use of technology. So we have to push it, we have to create platforms as such, we have to encourage people to use it. So it's very closely linked with the access to finance, and then how people comfortably can transfer fund or pay premium or receive claim, so that there is simplicity in going for it. In Philippines market is dominated by few players only, mostly big ones. So if there are more players as such, probably the output reach will increase. Next slide, please. So with this brief, I will go for Nepal case. Insurance in Nepal is relatively new. Though a company was established 73 years before, it was nevertheless a captive insurance company, primarily taking care of collateral of a bank which promoted it. And then after 21 years, a government company was established to take insurance care. Till then, there were foreign insurance companies branches who were providing, say that, a very limited insurance service. At present, Nepal have 39 insurance companies, 20 non-life and 19 life insurance company. And insurance penetration is now almost 2% of GDP. Next slide, please. Challenges which Nepal has faced at this stage is that same as the Philippines, that we have to look at cost-efficient distribution channels as such. It is still, we could say that not digitalized. So MFIs are used for delivery of product, collection of premium, and servicing client as such. So this is one area where a lot needs to be done. Equally, we also have to create insurance awareness. We have to use various vehicles available as such, so that people know power of insurance as such. And in the meantime, since last year, we also had very severe impact of COVID-19 and then returning migrants. COVID-19, as you know, that there was a forecast of 7% GDP growth, which has now come down to 0.6%. So you can imagine. Similarly, Nepal is fifth country in the world which receives highest percentage of GDP as migrants remittance. Now, because of COVID, they have started returning home, and then their proper management needs to be done. So for them also, see, the government and private sectors are actively engaged to see that how best they can be occupied. So we are working on reverse migration as such, where financial institution, bank, and then the associations, or you can say that INGOs, provide some sort of skill training. Finance companies or bank provide finance, and insurance company take that risk as such. So this is where it is working. I think it is in a very initial stage, but this is one area where we have to work very, very hard. It is estimated that at least 500,000 people will return from overseas. At present, there are 5.5 million working abroad. Most of them will stay back, but then the figure released the latest is that 500,000 are returning. So that will definitely have some impact on the economy. Next slide, please. Another challenge is that since there is very low awareness about about insurance and power of insurance, it is a supply-driven market. Number one. Number two, products are also very limited, because as and date, insurance companies are not designing the product, but the regulator is designing, and then uniformly it is been asked to provide it to the end users. So because of this, in Nepal, a pool is formed where all the micro insurance products are put together, sold, and then you can say that it's distributed equally. I said earlier, there is very limited use of technology, so we need to work on this. And for climate change risk, there is virtually no database. It has just started for some of the crops. We have started doing index insurance, especially fruit, but then there is no data. So even a lot needs to be done on data. Next slide, please. Challenges we have faced is that lack of adequate auxiliary services. For example, there are very few health service providers, agriculture technicians, weather stations, and in absence of this, you cannot do much. So this is one area where we need to work out. Okay, and then I said that building trust is another challenge as such. Insurance is still not a priority. And there could be many reasons as such. And one of the reasons is time lag in claim settlement, because technology is not used. Average turnaround time is 15 days, but the 15 days itself is a very long period for one who is at the bottom of the pyramid. Next slide, please. One of the suggestion is that, see, micro insurance is defined in various acts differently. For banks and financial institutions, something is micro loan, and for insurance, something is micro insurance. So it's not gelling well. So, okay. So if it is synchronized and whatever is disbursed as micro loan, if falls into micro insurance, then probably it becomes much easier as such. Okay. Then it is also not available for example, when we talk about agriculture insurance, all the products which are insured under this particular portfolio as such do not fall under micro insurance category. Whereas the same farmer, if he grows different crop, falls into micro insurance category, because in this category or out of this category determines the amount of subsidy one gets. So same person, same field, but because of change in crop is going beyond the region. So this also needs to be synchronized. And then we also have to formalize informal microinsurance product, which is basically offered by community-based organizations and microfinance institutions as insurance product, so that in case of eventuality, it is formal, and then the person doesn't have to suffer. It will also help in building confidence of the customer as such. At present, the insured sum of microinsurance product in Nepal is around $2,000, which is very, very less. So if this sum is revised to reflect market as such, then probably this will also help in promoting microinsurance. Next slide, please. It is our suggestion. How do we move forward? First of all, we have to make it very affordable as such. At present, the rates are, you can say that more or less same rate which is applied for commercial insurance. Only thing that is packaged in a smaller denomination, but then rates are same. So we have to make it affordable, number one. Number two, the present subsidy given on agriculture insurance by government needs to be continued for some time. In fact, it is in many countries. In Nepal, it's 75%. India is higher. But then this needs to be continued because this is very early stage, so we cannot go back. Next, please. So we also have to promote new and innovative distribution channel. Otherwise, at present, we are primarily dependent upon microfinancial institutions which lend money and then sell insurance policies also. And in case of claims, serve the client too. But then this needs to be widened as such. We also have to design appropriate products as per market need and demand. Otherwise, what will happen is that if it is coming from a regulator, then we'll have very limited supply of product, and then may not go well actually. And then we also have to collaborate with different government entities to develop infrastructure and develop required human resources. Next slide, please. We also have to increase coordination amongst different stakeholders, government, bank, financial institutions, NGOs, INGOs, development agencies, and local government. We have to develop pool of human resources, which is there, because in any case, technicians are in short supply. And we have formed pool age and date for sharing risk and benefits. But then if there is a need and if there is something new for which we don't have adequate data as such, then probably industry should come forward and form a pool. Next slide, please. With this, I have completed my presentation. So if there are any questions pertaining to this, and then how do we move forward, then I'll be happy to answer in Q&A session. Thank you very much.
Thank you very much, Mr. Shah. There are certainly a number of questions will come up during the session. I also do have a number of questions, but I would like to save them maybe for later. And now to give the microphone to Mr. Duverne. We heard about many challenges now in the industry, availability of products, no data, and we would be interested in to hear about your personal journey over the past maybe 5 years since you decided to invest in microinsure, set up ICII Merchant Consumers, since you, as one of the key players in the world's industry started to invest in inclusive insurance. So share a little bit your thoughts and your journey through the past 5 years, and maybe also lessons learned during that journey.
Thank you, Dirk. And I'd like to first thank the Munich Re Foundation and the Microinsurance Network for having invited me. Historically, AXA, like probably a number of other large multinational insurers, looked at microinsurance more as part of their corporate social responsibility activities, not as part of their core business. And we did have a few successful partnerships. In 2012, we did a partnership with Arawaj, a leading microfinance institution in Morocco, to which we provided the life, health, and property covered for 150,000 micro businesses. But the opportunities we looked at were really not strategic, and they didn't really move the needle. And then we struck a partnership with the IFC, the subsidiary of the World Bank, the International Finance Corporation, which was focused on inclusion. And with the IFC, we did a survey in 10 different emerging markets in Asia, Africa, Latin America, the large ones, and looked at women in insurance. What we realized through that survey was that really insurance penetration in emerging markets was really very low, and only touching between 5 and 20% of the population. So the gap was very large, and the market was really focused on middle and high income customers. Even the, I would say, the entrepreneurs that come out of poverty to build their small business were not covered. So insurance didn't cover the vast majority of the population. The second element which we found was that technology was going to be very important, because cell phone penetration in emerging market was huge, and it would be wrong to assume that we would have to go through stages with the first paper and then smartphone. We needed to go to a technology-enabled solution from the beginning. And so the key lessons. So we decided 5 years ago to create a specific unit at the head office called AXA Emerging Customers, which has built a dedicated team, and we also invested, thanks to again the IFC, a micro insurance intermediary called MicroInsure to get the benefit of their knowledge and experience. And what we learned during those last 5 years was that first, you cannot take insurance as you have it in mature markets and just make it smaller with smaller sums insured. So product miniaturization doesn't work. You have to make really much simpler products with very few exclusions. As an example, in the life and personal accident and health space, the only exclusion is self-inflicted injuries, illegal acts, and war, and sometimes not even those exclusions. Second lesson on distribution. Classical distribution with agents and brokers is too expensive. Therefore, we need to find tech-enabled distribution thanks to partnerships. As an example, we have a partnership with Western Union. I heard you, Dirk, in your summary, talk about remittances. This is exactly that. We insure migrant workers and their families in their home country to whom they send money. We did a first pilot in France called Transfer Protect, focused on the Francophone Africa, so the people that have a connection with their family in Francophone Africa. And we offer free life insurance attached to money transfers, and this was launched in the last summer. The third lesson, which I already mentioned, is that we need partnerships. because we cannot rely on our proprietary distribution. And for those partnerships to work, we need to create the right alignment of interests, which goes beyond financial incentives. So clearly, the distributor like Western Union gets a distribution commission, but that's not enough. I think we need to make sure that we deliver value beyond that. For example, we increase the customer loyalty of our partners, and this requires that we innovate continuously and have a very strong marketing expertise. So those learnings have enabled us to move from 1 million clients in 2016 to more than 18 million clients in 2019. So it's we were quite happy with this progression, and we believe that there is still huge room to grow.
Thank you. So that's an impressive growth from 1 million to 18 million. And also, I just wrote down this one lesson. You cannot take regular insurance and just cut it in small pieces and make it smaller. So you need a different approach. Now, we spoke a lot about COVID-19, certainly, because this is impacting all of us. This is impacting the conference. This is impacting our clients. What do you think are the next steps for the sector in face of the pandemic? How can insurers rebuild trust and show that insurance still works?
It's a very valid question, because I mean, COVID-19 occupies the mind of everyone, and it's puts back people into under the poverty line, and so it's critical that insurance can help resolve that issue. One of the critical aspects of microinsurance is that we've still not fully resolved the fact that the challenge that the claims ratio is relatively low. And the fact that the claims ratio is low is not a positive, it's a negative, in the sense that it shows that the knowledge by the customer that they have an insurance product is not sufficient, and we need to continue to train, to provide information to our customers so that they understand the benefit of insurance. The second element, which is one that was mentioned by Vijay, is the fact that for this we need to have, on top of the limited exclusions that I mentioned, very simplified claims processes, and a third aspect is that we need to add more benefits. An example of that is that we've added telemedicine consultation elements to a number of our products, hospital cash products around the globe, because this is a very concrete benefit that you can provide during the COVID crisis, and we've seen a good I would say take up of these elements in Egypt. We provided that service to microfinance, the customers of a microfinance partner. Out of 65,000 borrowers, 19,000 people in the pilot opted in for the telemedicine service, which led to 4,200 consultations, i.e. a 22% usage ratio, with almost 40% of those calls for COVID. So offering a high quality digital front door with a real added service beyond insurance, we saw as key. But another element that is also important in my view is that one of the reasons for the low insurance penetration, and this was also mentioned by Vijay, is the inability of the customer to pay the totality of the premium, and that shows the necessity to have public-private partnerships to support the payment of a portion of the premium.
Oh, thank you so much. So one lesson or one thing I noted down is that the clients need to understand the value of insurance and need to understand how insurance works. And I think Brandon Matthews said in an earlier session that the insurance that customers don't know they have doesn't create any value to the customer. So this is something we should keep in mind. So thank you, Monsieur Duverne. You have two hats on. One is the AXA head and one is the chair of the IDF, and we'll be talking about the IDF a little bit later. I'd like to invite Jan Keller to the panel representing UNDP. And Jan, we heard a lot during the conference, not rumors, but we heard about the insurance and risk finance facility that UNDP is starting. And we would like to hear more about this and what is it all about and what are the details and the work plan of that new facility.
Thank you very much, Dirk. Can I just double check you can hear me just before I dive in?
Yes, we can hear you.
Oh, very good. And thank you very much. And thank you for this opportunity to speak. First of all, to say, congratulations to the event. I mean, from what I've seen, it's been quite considerable, the success. You've also covered, apart from the volume of people and the range of countries, you've covered an amazing range of territory over a short period of time, and with a new mode of operation as well. So congratulations to you and the team, and also to Catherine and her team as well. Actually, just picking up on one thing from what Denis has said there, which is, this is one of the things which has struck me as we roll out our own work on inclusive insurance, and indeed through the new facility, is that actually a marker of success and particularly a marker of growth in the inclusive insurance is not low claims ratio, but high claims ratio. I'm thinking of some examples from the Philippines, which has seen a remarkable growth over 20 years, and such as card MRI. And I remember from Dr. Aris, who many of you probably know, telling me a key story of growth in the Philippines is that actually pay claims and pay them fast. And the lessons learned and the advocacy from that has driven business growth considerably. So just as a bit of a follow-on there from that. So anyway, to answer your question, so UNDP will launch later this year what we're calling our insurance and risk finance facility. I mean, essentially, it's going to do what it says on the box, as they say. And our vision for it is that it's a one-stop shop within UNDP for all issues of insurance and risk financing. To our country offices, certainly, as you're aware, many of you are probably aware, UNDP is an operational development agency, the development arm of the UN, and we're on the ground in 170 countries, and that's essentially what we do. And we will be basically working to support our country offices, and through them our program countries, and through them also our partners as well. So it's great to be talking to many of you today. So what does the facility actually do practically? Well, there are 5 work streams. So there's a breadth of work which we structure in five ways. The first pillar is indeed inclusive insurance. And then there's sovereign risk, or risk finance, if you like, not just always sovereign. The third is on natural capital and risk. The fourth is on the investment side of the insurance, and noting that $33 trillion of assets that the industry has under management, industry of all kinds. And then fifth, the integration and increasing the integration of insurance and risk financing into development, the long-term, if you like, sustainability. And then underpinning this are a set of things which are what you might call bread and butter UNDP areas, a strong focus on governance, on convening, innovation and technology, research and evidence, and then inclusion, strong link to the inclusive insurance area, inclusion and empowerment. So that's, if you like, the structure. Now, within all of those areas, there's always going to be essentially 2 main ways of operating, in a sense. One is this focus on governance, legislation, regulation, and institutional capacity, which is what UNDP does in many sectors in many parts of the world. So there's a strong focus on that in risk financing, in inclusive insurance, for example. And then the development and deployment of insurance products, tools, and services with partners. So they sort of go hand in hand within each of the countries in which we'll work. Maybe just a couple of principles as well, if you like, which are underpin, if you like, the facility. And I think maybe link to what we're talking about in this final session and to the conference. First of all, a strong focus on digital. maybe particularly in light of COVID, everything from, if you like, the marketing and advocacy of products all the way through to the tracking of impact. I think that's a sort of key focus. Secondly, we're not an insurer. We don't intend to be an insurer. So that, that fact in itself means that we have to work with partners from the insurance sector. So that's if you sort of generally. Now just drill it down one more level, which is into inclusive insurance. So we already have plans to work in 20 countries in the next 5 years. That's our sort of minimal plans. We have an ambition to work in inclusive insurance in 50 countries by 2030. It was a bit of a reach, but that's the ambition in these areas that I mentioned, on the enabling environment side, the governance, and the product development and deployment. And we really want to leverage in a lot of the work of UNDP from other areas. So again, as a note for those who don't know UNDP so well, we focus on grant financing. That's what we do. And we spend about $5 billion a year on grant finance. And there's a lot of other sectors which are very relevant to inclusive insurance that we are going to bring increasingly under the banner of and work with us in the inclusive, in the insurance and risk financing facilities, such as our work on social protection, disaster risk reduction, climate adaptation, health, coastal resilience, etc. So that's what we really want to do, because it is the first time ever UNDP will have a single place for its work on insurance, a single, if you like, coherent hub. Yeah, so I think that's it. And maybe just as a final point, and I think it's already been noted, insurance, obviously not as a panacea, but as a significant tool for not only financial resilience, not only, if you like, for risk management, but also for development writ large. And that's really how we see it. We see it as a core element, and maybe for UNDP, an element of our work which has been missing.
Yeah. Well, thank you, Jan, and thank you for the last point as well. I think the role insurance plays for sustainable economic development is still not really in the focus of many of the discussions, and I think we need to talk about that much more. And thank you also for outlining the program. We spoke a lot about the need to coordinate and to cooperate, and now UNDP starts an own facility on insurance. We see the ILO having a facility on insurance, World Food Program does, IFA does, so many UN organizations do have that. How do you cooperate with the other UN organizations so that you don't reinvent the wheel?
Yeah, that's a very good point. I mean, I'd say, first of all, all of the UN agencies in general have different comparative advantages, strengths and weaknesses. So, if I just focus the answer partly on UNDP right at the start. So, we're operational, so we're in all countries, and we have a strong focus on governance. So that's really almost like without sector. It's in many different kinds of areas. We also have a role within the UN system, especially after the UN reform, on what's called the SDG integrator. And one of those key areas is on finance, which is to actually work with the other partners to integrate the work of the UN funds, agencies, and partners, if you like, at the country level around the area of finance. So that's something which we have as our task to do. And we feel, if you like, when you look across the different UN partners, that we are in a good balance with all of those others, some of which are more environmental in focus, some of which are more food security focused, some social protection. So indeed, there are various different, if you like, facilities or programs or initiatives in place. But we think they are complementary. We're also working with them already, and if you like, in development, practical development, to work together at the country level, including with the ones you mentioned, such as ILO. I don't think you mentioned UNEP. WFP is certainly one. Also on the humanitarian space, on like anticipatory finance with UN OCHA. So, there's a range of things which are already in place. I guess another way to think about this is, encouraging also some of the UN partners which are perhaps not well represented within some of the other structures. Partnership structures would be something which is something we can do more of. So, for example, I'm thinking here of the Insurance Development Forum, which has a number of the key players of the UN strongly represented, but perhaps not all, and that maybe can be strengthened, especially when you get down to the working group stage, where we have 5 key working groups, including one on inclusive insurance. There's probably a few players who could be more strongly represented there, and we can do our own part to bring them along, if you like. I'm thinking also, of course, of the Insurers Against Global Partnership, which again has a working group on inclusive insurance. And it's different from the IDF in the sense, IDF being more private sector or industry focused, and then of course Insurers Against being more about the V20 and being more member state government focused. So both add value, and so the UN can increasingly align its work with those priorities with industry and with member states as well. But I think the really key thing, maybe this is my final point, is at the country level that really matters. So, you know, I would say, you know, the proof will be in the pudding, as we say, where I come from. I don't actually know the etymology of that expression. I think I do, but that's for another discussion. You know, come back and ask us in a year or so, and ask us whether actually we're doing the work at the country level. I think that's key, with the UN partners and with others, because of course there are many other partners as well, with which we should and can work. Yeah.
Thank you, Jan. And just a very quick, maybe you can give a short answer on that. It's probably challenging to give a short answer, but in light of COVID-19, in light of this current situation, but also the rapidly changing environment, we spoke about digitalization. How can you frame the work, the strategy of the facility in light of that changing environment and the current challenge that we are facing?
Yeah, I mean, that's a good question. I mean, I think it would be fair to say that you know, the facility was not designed with a massive health outbreak in mind. So if, you know, for example, Germany being one of our core donors, when we were having these discussions at the end of last year, it was not on the horizon. So it's not even heavily referenced, except a little bit through health and the importance of health and how inclusive insurance could be and should be a stronger vehicle for bringing health to those who don't have it. But otherwise, the entire 20-page document doesn't reference it at all. So that's certainly to be very true. But you know, we've been forced to really adapt and evolve our work along the lines of, if you like, health outbreak and COVID, even as we've been building up the facility, which is entirely not completed, by the way, I should say. And we've been doing it by looking at three main areas. One is on health, indeed, particularly health in Africa, and the 400 million people 408 million people who do not have access to universal healthcare. In a world of COVID, what does that mean, you know, when you get down to family level? Secondly, on SMEs and the massive impact on COVID worldwide on SMEs. And thirdly, on the secondary impact of COVID on health. So beyond, if you like, the health impact, into all of the areas, everything from family food security all the way up to macroeconomics and country, if you like, fiscal stability. So those are three things that we're looking at quite practically within the work going forward. And some of those areas are certainly the first two are very much linked to inclusive insurance. But I think so that's just a bit about the facility. But I think the other thing to think about is, well, what about UNDP itself? So for example, we are going through the iteration of our next strategic plan, which will be from, I think it's 22 to 25. And one thing that COVID has done is force upon the organization, I think, in a way that wasn't quite there before, a realization that issues of risk, issues of finance, and issues of development are essentially all the same thing at the same time, happening right at the same place. Whereas we as a development institution, perhaps in the way we've been constructed, and even the way we're formally constructed by bureaus, we have a Bureau of Policy and Program Support and a Crisis Bureau, for example, at the center, tends to split out issues of risk over here and development over there. And whilst there have been attempts to bring that together programmatically at the country level and in the way we structure our plans, it's never really been, I'd say, a part of our strategic thinking. So what COVID has done really is forcing upon us to really do that and do it now and for the long term. And our facility is in a certain sense at the coalface of that, because everything we do is about risk, it's about finance, and it's about development. So, it's going to be front and center of our work.
Okay, thank you very much, Jan. Really interesting. So linking risk management to development, that's really key, and glad to hear that this will happen within UNDP more closely. I would like to give the microphone to our fourth speaker, Jubal Chamberlain, representing Centfree from South Africa, but also he is the chairman of the Microinsurance Network. And Dubel, as the chairman of the Microinsurance Network, what do you think are the challenges do you see in the context of the post-lockdown? You experienced that in South Africa really hard. What are the challenges post-lockdown of the insurance industry? And again, how can we show that insurance still works from the perspective of the Microinsurance Network?
Thanks, Dirk, and it's really nice to be with all of you today. I must say I miss our physical gathering because so much happens in the corridors in between, and I find these digital corridors just not the same as the physical ones. So while I also need to add my commendation to the Munich Re Foundation and to Catherine and the Microinsurance Network team for pulling off a fantastic pivot into a digital one with an additional value added, I do hope that in the next year time, we will also be able to see some of our colleagues face to face again. On your question, Dirk, I think I'm going to try and make two simple points and you can guide me in the questions. The one is something that's often said about COVID-19 is that it does not create new problems, but it exposes the flaws that was there before. And I want to start off by actually, crystal balling at this stage is more difficult than, ever before. But I want to start off by just saying, where did we find our insurance and inclusive insurance industry prior to COVID hitting us? And what COVID has done is to expose those flaws on the one hand, but on the other side, it has also raised the priority of risk. The SDGs have already taken us there through climate, but really the COVID pandemic, as Jan also said, have elevated the near-term impact of risks and showed us what we can do if we have an incentive for action, right? And what I'm going to try and tease out is, while I make some sober comments, we are in the balance here about which part of this COVID experience is going to last. The positive innovation side and reshaping society, or more the negative side. So in terms of the flaws, I'm going to put two flaws that I saw in the insurance industry and that was referenced during this week and in the comments earlier. The one is that when we talk about inclusive insurance, we want to develop risk management solutions for low-income in emerging markets. We want to do that leveraging insurance and other means, but we are dependent on the insurance industry as that tool. And what we find and have found for many years is that the insurance industry is underdeveloped. So our industry both have to develop the tool and then to apply it. And just to mention some aspects which I think are relevant, this week we reported growth. Mr. De Verne mentioned AXA's growth, but we recognize that coverage is still very low in numbers and in types of products. We face inefficient markets, and maybe here I should focus primarily on the African continent, but I don't think it precludes the other emerging markets. So low claims ratios are not just a feature of customer awareness, but countries that have underwrite cost ratios of 60%, which doesn't leave much to be spent on the client. And the result of that is that there is a disproportional dependence of those insurance industries on investment returns. And you can probably see where I'm going with this. The next one is on claims. And I want to echo what Mr. De Verne said, that the things we saw in the landscape at the beginning of this conference is not ambiguous, right? I saw some diplomacy on saying, maybe this is not sufficient. I think we can pretty clearly say that if those are the averages, that doesn't constitute client value. There are outliers, but from our own work, we try to think about this, and within the funeral insurance space, the worst case that you can justify as client value is probably 40%. So I don't think we can beat around the bush there. So it's a difficult tool to wield with its own flaws. Alongside that, we had major changes even prior to COVID. The one was the shift to the SDGs, which took the system, the development system, a good number of years to figure out. It had a good focus on the real outcomes. But we also saw alongside that a change in the global political economy, the financial crisis, which started to focus donor attention on results that are easy to achieve, scalable, countable. And the combination of these is, while the SDGs did great to push us into real economic outcomes, including climate risk, it has taken the focus away from sector-based solutions. So for example, working with the insurance sector. And I don't think it was its intention, but the reality is that if you want to solve a food security problem using insurance, that food security engagement rarely has the space to solve the broader insurance system and build the tool that you need to use in that case. So, so that's where we started. And then COVID-19 entered. And I really wanted to, I want to focus just on two aspects of it. And I want to segue right to the end that says, I see a lot of impact of COVID still playing through the economy. And I see probably premature optimism of some of the insurers we've polled about how quickly they think the market is going to recover. And I think we need to deal with that as a consequence. It's going to still have a significant impact. And there are two parts of it. You know, we can, for example, debate in Africa whether we are going to succeed with lower costs on the health side, but we can't get away from the global economic impact, because if the first world is in a slowdown, demand for African economies decrease, and the same within those economies. So we know global demand is going to be constrained and economic demand within the countries. And I'm sure this is not news to you when the insurance already report slowdown in premiums, and it will remain constrained for some time to come. But the second one is actually more relevant for me, because maybe in the African, but also the broader development context, governments play a big role in the economy. And for the insurance sector, we anticipate that there are two impacts that will only start playing out in the coming months as we go to the financial year end. The one is that government debt have been increasing tremendously. We've already seen the first defaults within on the African continent. And the appetite for debt forgiveness is going to be slow because it's so widespread a problem. The second one is that governments are the single biggest employers if you talk about the African continent. And their budgets are going to start to become under pressure. So their role at just adding salaries to the economy and fiscal stimulus is going to be under threat. So two very specific things. If we look at the insurance income statement, investment returns are going to go down, and those inefficient markets with a reliance on investment returns to make ends meet are going to run into problems. On the asset side, insurers in emerging markets and in early stages of development are overrepresented in their assets in property and government bonds. And again, we can expect significant valuation changes coming through and on an ongoing basis. So that is the picture that we're seeing. And I'm not saying this to put the insurance industry down. I'm saying this actually that flaw in our engagement with inclusive insurance that allowed us to take our eye off the insurance market development and building the strength of the system may now catch up with us, because we need to have that focus to help insurance markets survive and recover as a result of it. So I think engagements like the one that Jan is referencing is a fantastic restart to that conversation. But we kind of left them 5 years ago when we said to them, sorry, we can't fix those problems anymore. And then, Dirk, if I can add my last comment, and just to confess, I'm the outgoing chair of the network, so I'm allowed to say controversial things, right? You gave me that brief. So the question is, how can insurers show that insurance still works? And I want to turn that on its head and saying, will it be insurers that show us that insurance still works? And I'm not going to dwell on the details here, but in the months of COVID, we saw an insurance industry that was pressured by a regulator to cover claims, that had 4 cases to establish which part of business continuity needs to be covered, and had differences of views between reinsurers and insurance on who needs to be carrying which risk. Now, there are lots of legitimate legal discussions there, but the point is this played out in the public eye and did not give us confidence that the insurance industry is showing up and trying to be relevant during this time. And if I can segue before I give you a point to come in, Dirk, where do we look then? If the insurance industry may not be the place where the rebirth of insurance may happen. And I think that deals with the second aspect of COVID. which is the rapid digitalization, the digital leap that happened out of necessity. And you've heard us talk a lot about digitalization. This is not just technology. This is the transformation of business processes through technology and the transformation of society as a result of that. And we are seeing more of the innovations happening within that digital sector than we are seeing it being born out of the insurance industry. And within the digitalization space, I actually just want to mention two facets. So the first part I mentioned to you is complicated economic conditions facing the insurers, and they're going to be distracted and in a battle for survival. On the digital side, it's not going to be the panacea, but we are seeing that digitalization has suddenly been pushed through, whereas previously we wavered on, is this going to happen? How are people going to adopt it? The necessity of COVID showed both that consumers are able and willing to do it, and some really lethargic stakeholders who weren't digitizing rapidly got into that space. But we know that digitalization is not an unequivocal blessing. It doesn't guarantee positive outcomes, and we need to carefully manage that. And I just wanted to mention two aspects of digitalization that I think what changed for me for the last year is firstly this forced digitalization, which gives us an opportunity. And the second part is that we have really started seeing that digitalization happens in practice. And two things that I've observed is digitalization is amplifying the ability of financial services and particularly insurance to play a real business driver role and develop an impact. It's no longer just for a rainy day. It is actually something that is driving the business model. And it could be as simple as a retail online trader being able to return the goods, to ensure the return of goods, which is essential for it to do its business. So I think that's the first thing that we've actually seen, that these digital models and platforms have showed us opportunities for inserting risk management that wasn't visible before, and that those are not rainy day probabilities, but active drivers of the business case of that digitalization. And the second one is, we've mentioned, insurance into real economic outcomes. I'm starting to look at digitalization as the secret sauce that allows us to take financial services into the real economy, because it integrates these in you can no longer talk about digitalization, financial services, and agriculture or something like that in separate terms. And I think that presents us again with the opportunity of leveraging insurance with real economic outcomes, instead of a policy that somebody needs to buy, which may in future get them to use it in some way. So maybe I stop there. That would be my two inputs on the expectations over the next quarter. And I'm really in a tug of war around, and nobody can predict which of these we are going to be able to get to succeed, the downside or the upside. But if you want the upside to succeed, then we as an inclusive insurance industry must have a plan about how we're going to guide and intervene to make that work.
Thank you, Dubel. Well, I hear the challenges, and I hear one of the few positive things of this difficult situation is certainly digitalization has been pushed, and everyone now looks at it very closely and tries to get rid of barriers and make the use of digital tools more easy, but also we need to acknowledge the limitations of digitalization. Dubel, one more question, maybe with a short answer, or try to be short. As the head of the Microinsurance Network, as the chairman of the Microinsurance Network, in light of the current situation, but also in light of the challenges that were existing before, outreach was small, understanding of insurance was very low. That was before COVID-19. So what is the strategy of the Microinsurance Network moving forward?
Okay, so I think the first thing that I can say is that despite the conditions, we actually find the network on quite a positive foot and with the ability to proactively engage at the moment. And I think the first thing that we are prioritizing is to working with our global partners to build an actionable agenda on how inclusive insurance is going to be relevant within the current market. And you can see the conversation between the IDF with the UNDP involved in these various factors, allowing us to revisit what are we going to do at a systems level and at a country level to actually move insurance forward. And we are able to do that because we could bank some positive changes over the last year. The network has been able to secure the government of Luxembourg funding, for which we are very grateful. That doesn't allow us all our ambitions, but gives us an anchor to proceed. And I must commend the government of Luxembourg for maintaining their commitment to development spending without, despite the conditions. We've built a strong foundation with the Secretariat, and Catherine and team have been able to show up for you as a partner within the Secretariat, within the conference, within the IDF forums, trying to see how we can support the UNDP, and we're building on the strength there. We have spent a lot of time engaging with the IDF, with UNDP, with Insure Resilience, with Munich Foundation to seek out positive partnerships, because we know, as Mr. De Verne said, that the problem is bigger than us individually. So we feel that we have been able to transition into a space where we can now tackle the next generation of problems. The second part is we need to continue to anchor our focus on low-income households in emerging markets as the outcome. And that is the part of the microinsurance network's mission that allows us to be a multi-stakeholder network, but not representing any of those stakeholders that we consolidate into our network, but really representing consumer outcomes. And we need to do much more on understanding demand. The landscape study is just the beginning. Consumer centricity, working on quality of supply and finding ways of incentivizing that. So that's the second one. We need to work towards a holistic approach to risk management. It needs to be beyond climate risk to include the other sets of risk as the SDGs and pandemic have now pushed us. And it needs to be beyond traditional insurance in terms of the stakeholders that we need to bring in. And we think there is growing and strong alignment with the ESG framework on how to take that. We think we need to take these global discussions down, continue to use that down at the country and regional level. We've pushed our regionalization quite a lot in the last year, and that is where I think a lot of the gap is in terms of emerging market insurance industries. And the conversations that you've seen this week reflecting on national strategies, including the one like the Philippines that was mentioned here, it's important to think about what was done, but it was also important to think where it started. And many of those started with a group of stakeholders coming together across multiple boundaries and saying, how are we going to collectively solve this within? We don't have the means, we don't have huge budgets, but we need to collaborate. And that's where our regionalization strategy needs to continue. And one last thing that I would say, Dirk, that is perhaps more of a question because it's something that the network itself needs to grapple with, is that given this context of economic environment and COVID and digitalization, we really, as an inclusive insurance, need to work together on how we're going to guide the industry through the impacts of COVID-19 and digitalization. Because I don't think it will be wise just to sit back and watch and see what's going to come out on the other end, because we may lose a lot of the gains that we've had over the last couple of decades of work.
Thank you, Dubel. I would like to come back to Denis, please. And I said that in the beginning. I would like to hear more on your views, the shifts the industry need to take, and how PPPs, for example, can enable that, and how, the IDF can help increase outreach, especially for those who need it more or need it most, to increase outreach to inclusive insurance and to work more in inclusive insurance. And maybe one personal question, how could we convince more CEOs to go the same path as you did and to invest in inclusive insurance and not only see it as corporate social responsibility?
Thank you, Dirk. First on the IDF. So the IDF, as you probably know, was created in the wake of the COP21 in Paris in 2015. It groups together the large global insurers and reinsurers with the UNDP and the World Bank, and it has the objective of ensuring 500 million people in emerging markets impacted by climate change. We've made this very significant progress in September last year when we signed a tripartite agreement at the UN Climate Summit in New York between UNDP, BMZ, the German Ministry of Economic Cooperation and Development, and the Insurance Development Forum. This tripartite agreement aimed to cover 20 countries, where UNDP offices across those countries open discussions with the government to identify their risk management and financing needs and how insurance can help. The German government delivered a commitment of 20 million euros in financing to support the delivery of technical assistance, and insurance companies committed to provide both $5 billion of insurance or reinsurance capacity and risk modeling tools and co-investing with BMZ on the technical assistance. We have made further progress this year recently and launched our first project in Peru, where we have, with the government of Peru, a commitment to cover 50,000 schools for flood and earthquake insurance, 50,000 public schools. We also will incorporate in that program Build Back Better standards for the reconstruction and leverage innovative image recognition technologies as part of managing these public assets. So this is an example. I mean, this tripartite and the first example with Peru are examples of how a public-private partnership can achieve significant progress on the ground. We also have, as you know, within the IDF an inclusive insurance working group, which is co-chaired by Astrid Zwick from the Insure Resilience Global Partnership, Garance Vates-Richard from AXA, with very strong support from the Microinsurance Network, and Catherine Pulvermacher, who I'd like to salute for very strong support in this program. In this working group, we aim to facilitate an enabling environment through regulatory collaboration and capacity building. We want to implement scalable solutions by building a marketplace for practitioners and donors to meet and select the most impactful projects. And we will measure progress against the Insure Resilience targets and develop an impact framework using the Microinsurance Network landscape, a study which we need to take to the next level in terms of data quality, probably building bridges with the work done by the World Bank on its triennial Findex survey on financial inclusion, which is currently only focused on banks and credits. And what if we can't measure, we can't improve. And ultimately, would like to push for insurance penetration to be measured as part of the UN SDG KPIs in the same way as bank accounts and ATMs are measured in the SDGs. So we are still at an early stage on the inclusive insurance side with the IDF, but I believe that we have taken a new start recently, and jointly with UNDP and Insure Resilience and the Microinsurance Network, we expect to make significant progress. On your second question, Dirk, on what can we do to push other large insurance companies to go beyond corporate social responsibility, I would say that it would be wrong to think that we are alone in that game. Allianz is also very advanced in terms of inclusive insurance. They've also bought an intermediary called Bima. A number of the reinsurers are also active, Munich Re, obviously, and Swiss Re. And you said local insurers. Yes, clearly local insurers are involved in microinsurance. And but I also believe that domestic insurers in each of the developing markets need to put more focus on inclusive insurance. And we at the Insurance Development Forum, we want to make sure when we approach a country like Peru as an example, but we have as I mentioned, 21 countries in which we plan to develop those programs. We want to systematically work with the local insurance association to make sure that there is also a participation of the local insurers.
Thank you so much. We need to look at the time, unfortunately, a little bit. Time flies, that all this very interesting and enlightening input. And there's one question from the audience which goes to Dubel, and I would like to combine that with two more questions which I would like to ask all speakers, maybe to wrap up this session a little bit. So the question that would go all to the four speakers, and you can prepare yourself while Dubel will answer it in the first place. I would like to hear from you, what are the one or two lessons learned from that crisis for the insurance industry? And where do you see inclusive insurance maybe in 5 years? And Dubel, there's one question in addition for you around the importance of cooperating with the government, especially around financial literacy. And how do you see that? To what extent do you see the importance of cooperating with the government really to develop the market?
So Dirk, I think the quick answer, and probably not a satisfactory one, is it's a major part of this. And particularly if we're going to move beyond risk transfer to also risk management. And we can already see that in the climate side with urban resilience, but also in the other parts like health and agriculture. Governments throughout the world are key participants in making that work. So I think it's a no-brainer as far as I'm concerned. In terms of the two lessons and where we are in 5 years, I think the main lesson for me is if we understand the urgency, we can act. And the second one is I expect to see insurance showing up in a far more integrated way with other products and services and business models, and being a key enabler of development, not just a safeguard for a rainy day.
Okay. Thank you. Jan, what are your views on the lessons learned from that crisis, and where do you see inclusive insurance in 5 years?
Jan, microphone.
I think you're on mute, Jan. Then maybe while we wait for Jan, maybe Denis, you want to answer that?
Yes, so I'd like to both answer that and a question that was raised by one of the participants. So one of the lessons for us of COVID-19 is that, I mean, even when we at the IDF focus on climate related risk, in reality, you cannot, especially for the population targeted by our inclusive insurance program, you cannot look just at climate risk. You need to look at climate risk and also health and life related risks. So this, you need to look at it comprehensively and not just focus on climate. Health is a key part of the issue. Hospital cash, as an example, is a very important element in all offerings, as well as protection products. So that's the first lesson. The second lesson, I believe, is again, as I mentioned earlier, public-private partnership are absolutely required, are absolutely essential. And a third point, which I hope answers the question that was raised on in the Q&A, is that we've also realized that I mean, COVID-19 has also significant impacts on the less favored populations in mature markets. And what we've learned in terms of product simplification, less exclusions, and so on, from working in emerging market on inclusive insurance, we can piggyback and replicate in mature markets. And this is what we do when we launch product for the remittances in mature markets, targeting populations that straddle both mature and emerging markets.
Thank you. Jan, are you back?
I am. Sorry about that technical glitch.
No problem.
That would not unmute. Yeah, just a few thoughts. Actually dragging across from what Dubel was saying. So, if we're talking about 5 years, I think first of all we have to think much longer than 5 years. 5 years is almost just like a drop in the ocean, and I think government is actually central to that, and the transformation, if you like, to use that term, of the legislative and regulatory framework within which governments manage insurance, and the institutional capacity to do so is absolutely critical. I think that's point one. Point two is that following on from what Dini was saying, that really needs to be done hand in hand with the private sector, with the mutual and cooperative sector. It shouldn't be just, if you like, shouldn't be just us, if I could just say that, or the development community working with government, or just government alone, but actually, learn lessons from other countries and increasingly apply them to the more challenging places to work. And that leads on to my third point, which is, this is all kind of interrelated in my narrative, which is to be ready for the long haul. And I'm thinking here of Africa in particular, and Dubel, I'm sure you will critique me as I get my numbers wrong. But we've made a particular focus on Africa when it comes to inclusive insurance. With our Regional Bureau for Africa, we're really looking to have a dedicated program looking at national and regional insurance actors and see how we can work with them across, for example, Sub-Saharan Africa, mutuals, cooperatives, private sector. But if I'm not mistaken, the insurance penetration in Africa is 2.5%, and 80% of that is South Africa alone. So if that's the case, wow, there's a huge amount of work to do. So, if we're thinking about this for the long term, both in terms of the challenges, but also the opportunities for the industry, for the market, that's where it sits. And that's, I think, where we need to look to next.
Thank you. So be ready for the long haul. This is really one of the key issues. Don't be disappointed if you don't get fast results. Vijay, what are your thoughts on the learnings from the crisis, and where do you see the industry, inclusive industry, in developing markets in 5 years, or maybe beyond?
Let me take first thing first. I'm seeing that a lot of social and welfare activities of government will get transferred to insurance industry in the next 5 years. Okay, it could be pertaining to medical or pertaining to retirement or whatever it is. So many of these activities I'm seeing that will come to insurance for number one. I am seeing massive use of technology. Okay, so since I represent companies working in developing countries as such, and technology is still at its lowest level, I'm saying that there is no option but to go for technology. So massive use of technology. And I'm also saying that there will not be any product which will not be available. So there will be a lot of product diversity. Today, we have only limited product available in the market, but then next 5 years, virtually everything will be touched, because inclusive insurance is for the people who are at bottom of the pyramid and they have no option but to go up. So insurance companies or industry as such is also vying to groom them so that they grow, and along with them, the industry grows. This is what I could wait for next 5 years.
Wonderful, thank you. So a big thank you to all the four panelists for taking your time for this very interesting discussions. We took a lot of notes. We'll summarize that very soon. And to wrap up the conference and say a few words, I would like to give Catherine Pulvermacher the microphone. Catherine, please.
Thank you, Dirk. And thanks to all of you for such a great panel. I'd like to pick up on a couple of things that got mentioned and really reinforce them. One of the themes we saw coming through this week was a very strong theme around the need for insurers really to become more customer-centric. And that's certainly one of the things that we picked up on the landscape. And I think one of the opportunities that we're seeing currently is a breaking down of barriers between sectors, between players, partly thanks to technology. But I think we need to go further, and I would encourage the insurance sector really to learn from the FMCG, fast-moving consumer goods sector, who are about 2 decades ahead when it comes to understanding customers, customer segmentation, and so on. And I would really strongly urge that. Another thing that I would say is digitalization is great. We need to be very conscious, though, of the digital divide and ensuring that as we embrace technology to help shift the curve, and we need to do that to to reach the scale that we need for microinsurance, for insurance for low-income people to be viable. Let's ensure that we really don't leave anyone behind. And on the not leaving anyone behind, again, I'd like to reinforce this point that it would be really great to see a review of the indicators that are used to measure the various SDG targets. Insurance is mentioned once in the entire list of the targets. It's not included in any of the indicators. And I believe that unless it is included in those indicators, we're going to keep hitting barriers because, as Denise said, what you can't measure doesn't exist. So I think that's a really crucial point. The other thing that I'd like to really celebrate is that we have got quite a high percentage of women speakers. Now, when I tell you the percentage, we had 75 unique speakers. Some speakers spoke on more than one panel during this week, so 75 people in total, and nearly a quarter of them were women. Now, I must say I'm disappointed that it wasn't more than that. I think that's something certainly to aim for. But I think that one of the barriers for inclusive insurance in particular, but maybe insurance generally, is part of the ground to be broken with respect to reaching the customer is acknowledging that half of your potential customers are women. And if they're not included in the insurance sector, if they're not represented in leadership, and just generally working in insurance and insurance-related sectors, you aren't going to understand your own customers. So I am very pleased that we had as many as 24% of speakers that were women. I'm even more proud to announce that with our incoming board, and I think Dubel's also very proud of this, we have actually a majority of women, an easy majority. So we've had 50% women board members for quite a while. And we will be moving to a majority. So that's something that I'm very, very pleased about. But I would encourage everyone to keep their eye on that game, be aware of unconscious gender bias in all sorts of ways that creeps in. Because the diversity that we can and should be embracing, not just in the sphere of gender, really brings a wealth of thinking and therefore a wealth of solutions and innovation that we need so badly. So I'm going to move on now to my favorite bit of these closing remarks, which is thanking people. And you know, it takes a lot of different people to make an event like this a success. So the first people I'd like to thank is our participants. We had an incredible number of people registering, but even more impressive, a very high percentage of those who registered actually attended. So we have those numbers and we've been watching them during the week. And that's really very encouraging because fora like this are important. I agree it would be really nice to meet in person and very much looking forward to doing that again. But this year we've had the opportunity by doing it in this way to be really inclusive to a far greater range of people. And I'm really pleased to see that. And I know that Dirk is as well. We also have got, and Azzy, I wonder if I could share my screen very briefly. I'd also like to share with you my thanks to the conference organizing team. I don't know if you can see it. Can you see it?
Not yet.
Okay, Azzy, just a second, bear with me. Yeah. So I hope that you can see a picture here that was taken during one of our 2 daily catch-up calls. This is the Munich Re Foundation conference team and our own microinsurance conference team. I'd really like to thank all of you, especially Hugo, who was extremely diligent in ensuring that the conference daily summaries were available every day. That involved sending the notes to the person who writes them, checking them with me, and then getting them back to Munich Re Foundation and uploading them the next morning. So these are the things that go on behind the scenes. I'd like to, Azia, could you turn my screen sharing off now, please? Thank you. I'd also like to thank the rapporteur, sorry, I don't know how to say that in English, who every day have been getting up, sometimes at very unfriendly hours, to cover the conference sessions and complement the notes that the Microinsurance Network was taking. So a big thank you to Maria Victoria Sanz, Zahid Qureshi, Kira Henshaw, Ulf Koenig, and Jose Miguel Flores Contro. I'd also like to thank the steering committee. So we carefully select the content for this conference every year. It was even more challenging this year with fewer sessions and some very good proposals. Every member of the 16-member steering committee team reviews the proposals, and it's a time-consuming exercise, but well worthwhile, because that's how we bring you the content that you've been enjoying this week. So I'd like to also thank the Microinsurance Network members. So you may not know it, but nearly 2/3 of the speakers and hosts of the different sessions were actually members of the Microinsurance Network. It's not just about the glory of seeing your face on a screen. There's a lot of hard work that goes on behind the scenes to prepare those sessions. So a very big thank you to all of you, and especially to the 2 best practice groups who presented such excellent work on insurance for SMEs and on hospital cash. So I think that that's it for me, apart from also wanting to say a very huge thank you to Jubel. We've worked together very closely for the last few years, and he will be sorely missed on our board, but we'll carry on working with Senfree and really appreciate the great work that you do at Senfree. And just a very quick reminder to all of our members, we will be holding our General Assembly on Thursday, the 12th of November at 5 o'clock European time. If you haven't registered, please do so. If you have registered, please do attend. Thank you so much, everyone.
Thank you, Catherine, and I would like to join you in thanking many, many people. So you already mentioned the steering committee, and I would like to thank Dubel, Chamberlain, Lorenzo Tan, Craig Churchill, Denis Garon, Hannah Grant from ICII, Glenn Harrison, Owl Johnson from the Insurance Association of Jamaica, and we'll talk about that later, Jan, who you just met on the panel, Richard Leftley, Antonis Malagardis, Michael McCord, Sabir, Catherine certainly, Mia Thorne from Senfree, and Craig Thorburn. The rapporteurs team here, we're going to write, so to answer the questions that will be coming, yes, there will be a broader summary, there will be a report about the conference, there will be the presentations up on the agenda website. We are also already uploading the recordings once we get them, so the team is working hard on that as well. So you'll get all the results and all the summaries. I would like to thank not only the Microinsurance Network, I'll talk about that later, but also the content partners, those organizations that took time to organize a session, get the speakers together, work with us on the content, which is ICII, Georgia State University, Center of Economic Analysis of Risk, Senfree, AO Consultants, the International Actuarial Association, ILO's Impact Insurance Facility, the GSMA Association for the first time joined with us and organized a conference, GISET certainly, Microinsurance Center at Milliman, and MCII, and our media partner, Asia Insurance Review, who published already some articles on the conference. Again, this wonderful team also from my side, a very, very, very big thank you. And just keep in mind the time zones in which we are working, and putting articles up at 1 o'clock in the morning. This is something you cannot ask. This is something someone wants to do and is really being enthusiastic and working on this topic. And I really would like to thank every one of you. Usually you would get a nice round of applause from the audience now, but that's the bad part about digitalization. The interaction is limited. So a very, very big thank you. A big thank you, and this list is still not complete, to all the speakers, and this is really important to me. I mean, you all took your time. It certainly was easier for you to join, but we reached out to many, many more people. Catherine just mentioned there were 25% of women, which I thought should be improved, but that's also along the call for proposals share. So if you look at the call for proposals, also about 25% were submitted by women, and we hope to get that number up. But 50% of the sessions were chaired and facilitated by women. So there we got a higher number, which is great, and we will be working on that. But diversity is more. It's about regional and geographical diversity and different cultural backgrounds. And I think that diversity in this conference was unprecedented, certainly pushed by us being forced to cancel the in-person conference and having it digital. But it was great to have all the speakers. Thank you so much for that. Now, what's next? We're not giving up. Our plan is still to hold an in-person conference next year. Certainly, we need to look at the development around COVID-19 and see if it's possible to travel by then. We hope it will. And if it will be, on behalf of the Insurance Association of Jamaica, I would like to invite all of you to this beautiful country of Jamaica, which is in the heart of the Caribbean. We spoke about the Caribbean during some of the sessions. We heard that there's lots of interest in the topic. We heard about the need of harmonization, of regulation, maybe to speed up market development. So this will certainly be one of the topics we would like to discuss. Jamaica is a country of about 3 million inhabitants. Market penetration in terms of percentage of workforce is about 30% of the workforce has life insurance, 1/3 has health insurance, and only 20% have pensions. Jamaica, despite being a beautiful country, it's exposed to a number of quite substantial risks, which certainly is hurricanes and floods. Non-communicable diseases are one of the highest risks in the country, and motor fatalities. And on behalf of the Insurance Association of Jamaica and Orwell Johnson, who's the chairman of the executive director of the association, would like to invite all of you to Jamaica, provided the situation improves, and which we hopefully it will. I think this is all from our side. A big thank you to all of you for participating. Again, a very big thank you to the panelists. I hope I did not forget anyone to thank. I see wonderful comments in this chat room here. We will also be sending a survey which should go out now or has already gone out. Please send us your comments and your feedback and what we can improve, what we should add to the conference. And I think this is it now. We are closing the conference. A big thank you. See you next year. Stay safe, stay healthy. Bye-bye.